globally, we all need gold. I don't think this trend is going to change anytime soon. Now, what we have to also consider is that the U.S. Imbalances on the fiscal and the trade balance side are enormous when you talk about historically. And so the only way out of this issue really is devaluing the dollar versus other fiat currencies. So the decline of the dollar itself, along with the purchases of gold, could also unleash other trends like emerging markets, like other developed economies. And so I'm very open-minded to those ideas, because I do think we're sort of either seeing that in front of us or on the brink of some of these markets beginning to really outperform.
The demand for gold is expected to continue rising globally and is unlikely to slow down anytime soon. Due to market reactions to tariff changes, fiscal concerns, and bond market volatility, gold has increased for 5 consecutive months so far this year. Meanwhile, the dollar's standing as a global reserve currency is being strained by the United States' massive budget and trade deficits. Analysts predict a longer-term decline in the dollar's value, despite its short-term strength, pointing to increased de-dollarization in regions such as Europe and Asia, as well as potential risks to economic policy. Nearly half of institutional investors report reducing their exposure to U.S. dollar-denominated assets in favor of those in Europe, China, and emerging countries, indicating that major investors are currently shifting away from U.S. markets. Tavi Costa, a member and macro strategist at Crescat Capital since 2013, notes that during World War II, the U.S. gold reserves equaled about 40% of its national debt, compared to just 2% today. As the U.S. debt-to-GDP ratio rises, gold responds non-linearly. Prices have historically accelerated once debt surpasses 100% of GDP. Current trends indicate a continued upward trend in prices. Modifications to Treasury valuation policies suggest that government-held gold could be marked up, boosting the balance sheet without new debt and thereby increasing fiscal flexibility. To manage this, the U.S. will likely need to suppress interest rates, as current levels are unsustainable. He believes a revaluation of gold will become necessary as part of this shift, making higher gold prices increasingly likely. Ray Dalio also warns of a looming national debt crisis and recommends holding 10 to 15% of assets in gold as a hedge against inflation and potential dollar devaluation. Experts warn that excessive government borrowing may erode the Federal Reserve's independence. Under fiscal dominance, monetary policy may be compelled to maintain low interest rates, thereby reinforcing inflation and depreciating the dollar. Bank of America suggests that the growing national debt, combined with Western fiscal profligacy and declining real yields, positions gold as a safer alternative to traditional safe havens, such as U.S. Treasuries, with a $3,000 per ounce forecast under current conditions. To manage this, the U.S. will likely need to suppress interest rates, as current levels are unsustainable. Tavi believes a revaluation of gold will become necessary as part of this shift, making higher gold prices increasingly likely.
Well, first of all, back in the days when gold actually was significantly more relevant, I think back in World War II, a little before that, gold was equivalent to about 40% of U.S. debt. Today, the world keeps saying that the reason why U.S. is able to have only 2% of gold relative to debt is because of its military strength. I like to look at history, and I don't think that's really correct. I mean, sure, there's some reasons for it, but it doesn't fully explain the situation. Today, the U.S. dollar is at one of its most expensive levels, despite the fact that it had one of its worst year-to-date performances since the 1970s. And in my view, we can see very clearly that we're going to have to substantially increase amount of treasury holdings of gold at some point, either through a revaluation of gold itself or through an acquisition of the metal. And so back in the 1970s, for instance, I think our number was somewhere close to 17%. So you can kind of Wow. Think about these things. I mean, if we're going to be revaluing gold, if we're going to get into those types of policies at some point, of which I'm a firm believer we will be at some point seeing some of along those lines. If you start playing with the math, let's just say we go back to 17% of the debt. We're back to $24,000 in gold prices. Now, I'm not here to say we're going to go to $24,000, and I don't need to be quoted on that. My point is how undervalued gold is today, despite the fact that we saw this large increase in prices in over the last few years. Very bullish long term. I think it wouldn't shock me at all getting to those crazy numbers, given the imbalances we have globally. To me, it's just green light to invest in the space right now. Look, I think it's the responsive policies over the last few decades. We've run a very indisciplinary type of government administrations over the last, since the 1970s, perhaps since the break of the gold standard. We've been taking more and more debt. It's funny because a lot of the gold industry has done a lot of work on how much gold we have, and usually it's done relative to monetary base. Usually it's done relative to GDP, or usually it's done relative to money supply. But the problem is, most of those metrics, like, monetary base is only less than $5 trillion, which is not reflective of where all the debt is. Or money supply is today making new highs and still at $22 trillion. Now, the debt itself is hitting almost $37 trillion, nearly $40 trillion here. So the government debt is much more reflective of how much money is in the system. So this is why I wanted to go back and see where we are. I firmly believe that in order to see the sovereign wealth fund put in place, or buying back treasuries, as the Fed is, or the government is ultimately going to have to be suppressing interest rates at some point, because we cannot live in a world where we're paying 4 to 5% of interest payments to GDP. And so in order to see all these things come to fruition, most likely the revaluation of gold is going to be part of that environment. So that's just I think one step towards seeing higher metal prices.
The speaker questions whether the U.S. still holds the world's largest gold reserve, suggesting China may have surpassed it. A massive deposit of high-quality gold ore containing an estimated 1,000 metric tons, 1,100 U.S. tons of gold, has been uncovered in central China. China currently stands as the world's leading gold producer, a position that seems secure for the foreseeable future following this landmark discovery. This discovery has significant implications for the global precious metals market. As the world's largest gold producer already, China's position will be further strengthened with access to what might be the planet's most significant gold reserve. Announcements of the findings have contributed to a further increase in the already skyrocketing gold price as demand for the resource continues to rise amid global uncertainty. Additionally, global central banks purchased a net 20 tons in May, based on reported data, which is close to but still below the 12-month average. Fresh tensions in the Middle East may have reinforced the strategic appeal of gold for central banks looking to safeguard reserves against geopolitical shocks. This continued interest in gold was also highlighted in our recently released Central Bank Gold Reserve Survey 2025. Gold remains a focus for central banks worldwide, with 95% of respondents believing that official gold reserves will continue to increase. A record 43% of central bankers also indicated that their gold reserves would rise over the next 12 months. However, a weakening U.S. dollar could further fuel gold demand and spark stronger performance in emerging and other global markets. Let's dive into the interview.
I think what's already forcing the U.S. to look very differently is what's been happening outside of the U.S. Does the U.S. even have the largest reserve of gold in the world today? I don't think anybody knows that answer. We can argue and say that maybe China already surpassed the U.S., but certainly has, let's just agree that it struck some nerves in the administration that other countries are accumulating the metal, and we've chosen to be on the side of this accumulation or buying spree of gold for the last decades. And so I do think that this is very problematic. I believe that we're now holding one of the lowest reserves in 90 years. We're going to have to change that at some point. And so it's very likely that the U.S. is going to participate on this and pay attention to all these, in my view, all these differences in shifts of the way the government's engaging with even the private markets, like this MP
Yep.
Materials investment of the Department of Defense, a
Yep.
15% stake on this. Last time we've seen something like this was in the World War II. And so of this degree, some people will say, well, what about those This is not a bailout. This is actually a strategic investment. They're not going to be passive investors. They're going to be active investors taking 50% of profits on their further developments they're going to have in this company. So you have to start thinking, all right, well, what are other critical industries here? Gold has been put into a critical metal recently by the Trump administration. Can we see these types of investments even in the gold space? I think that's I'm very open-minded to this, and not that I agree with it. I actually think this is sort of the government just owning, creating. This is not revolutionary. We've seen this in Africa, in South America, in China, where companies become state-owned businesses. And so, but I also think that as a market participant, I'm just here to see what are the possibilities in terms of policies, and that's. In my view, that's another one that could potentially be the case here. Globally, we all need gold. And so I don't think this trend is going to change anytime soon. Now, what we have to also consider the U.S. Imbalances on the fiscal and the trade balance side, are enormous when you talk about historically. And so the only way out of this issue really is devaluing the dollar versus other fiat currencies. So the decline of the dollar itself, along with the purchases of gold, could also unleash other trends like emerging markets, like other developed economies. And so I'm very open-minded to those ideas because I do think we're sort of either seeing that in front of us or on the brink of some of these markets beginning to really outperform.
Rising geopolitical threats, economic instability in the United States, and accelerating de-dollarization across global markets are all driving global gold demand upward. As central banks and institutional investors shift their focus to gold, the metal is recovering its position as a reliable hedge against inflation, currency depreciation, and systemic financial concerns. Rising U.S. debt may eventually necessitate a revaluation of gold, potentially resulting in a historic price increase. As China increases its gold supremacy and global reserves shift eastward, the long-term bull case for gold remains strong. Could a gold revaluation be used to boost trust in U.S. fiscal policy? How will China's growing gold dominance impact the global monetary system? We would love to hear your opinions, so please leave them in the comments box below. If you found this video helpful, please give it a thumbs up and remember to subscribe for future videos. Thank you for joining us on this adventure.